Hey everyone, welcome back to Corporate Decoder. Today GLED just filed an 8K announcing a merger, and I am seeing one key detail that could really impact this deal. Quick note, this is not financial advice, just my take on public filings for educational purposes. This new deal involves a SPAC merging with a company called Rongcheng Group Limited, which operates in waste sorting services. And what is interesting is how the share exchange is structured. So this is a current report filed by GalaxyEdge Acquisition Corporation, which is a SPAC. Essentially a company that raises money to buy another company. The big news here happened on May 1st, 2026. This is GLED, the SPAC we've been watching. They are incorporated in the Cayman Islands, which is pretty common for these types of entities. And their main executive office is in New York. They have units, ordinary shares, and rights traded on the New York Stock Exchange under tickers GLED-U, GLED, and GLED, respectively. And yes, they are an emerging growth company, meaning they get some flexibility with financial reporting rules. Now, let's get to the heart of the filing. This is all about a merger agreement that was signed on May 1st. The deal involves a couple of steps. First, GalaxyEdge, the SPAC, is going to merge with one of its subsidiaries. Then, that combined entity will merge with Rongcheng Group Limited, the actual operating company. Think of it as the SPAC dissolving into a new structure that then absorbs the target company. So, after all the legal shuffling, Rongcheng Group Limited will become a publicly traded company, and GalaxyEdge's shareholders will effectively own a piece of Rongcheng. Here is a crucial detail for shareholders. Rongcheng shareholders are getting approximately 35 million shares of the combined company, and these shares are valued at $10 each. This means the pre-money valuation for Rongcheng is set at a hefty $350 million. Looking at leadership, the combined company's board will have 5 directors. One will be chosen by GalaxyEdge, and the other 4 will come from Rongcheng Group. It also looks like the current management team of Rongcheng will be taking the reins of the newly public company. Like most merger agreements, this one is packed with representations and warranties. This is where each side makes promises about the state of their business. Rongcheng is making promises about things like their corporate structure, legal standing, capitalization, financial statements, and contracts. And GalaxyEdge, along with its subsidiaries, is also making similar promises about their end of the deal, covering things like their shell company status, trust account, and SEC filings. Before the deal officially closes, both companies have agreed to certain rules about how they will operate. These are called covenants. A big part of this is preparing and filing a registration statement with the SEC. This document is super important because it will contain detailed information for shareholders to vote on the deal and for investors to understand the combined company. They are also promising to do their best to get all the necessary approvals to make this merger happen. Rongcheng will need to provide specific financial statements, which will be crucial for investors to assess their financial health. Now, what needs to happen for this deal to go through? There are several conditions. Key conditions include no laws preventing the deal, getting shareholder approvals from both companies, the SEC declaring the registration statement effective, and importantly, getting the combined company shares approved for listing on the New York Stock Exchange. This is a standard clause, but worth noting, the promises or representations and warranties made in the merger agreement generally won't last after the deal closes, except in cases of fraud. However, any agreements that are supposed to continue after the closing will still be in effect. There are also specific circumstances under which either party can walk away from the deal. This includes if the merger doesn't happen by a certain date, if a government body blocks it, or if one party significantly breaks the agreement. To help ensure the deal moves forward smoothly, certain major shareholders of Rongcheng have signed what is called a company shareholder support agreement. Essentially, these key shareholders have committed to voting their shares in favor of the merger. This is a strong signal of support and reduces the risk of the deal failing due to shareholder opposition. GalaxyEdge's sponsor, which is the entity that initially put the SPAC together, has also signed a similar agreement. The sponsor agrees to vote their shares in favor of the merger and to not redeem their shares, which is important for the SPAC's trust account. At the closing of this merger, some significant shareholders from both sides, including the sponsor, will likely enter into lock-up agreements. This means they won't be allowed to sell their shares for 180 days after the deal is finalized. This is a common practice to prevent a flood of selling pressure immediately after a merger that could drive down the stock price. Think about this, like when a company goes public through an IPO, insiders usually have a lockup period. For example, after some SPAC mergers, companies that skip this lock-up period have seen significant initial drops, sometimes in the 70 to 90% range in the year following the merger. This agreement aims to create more stability initially. There is also going to be a registration rights agreement. This agreement basically gives certain shareholders the right to have their shares registered with the SEC, which makes it easier for them to sell those shares on the open market in the future. It includes things like demand registration rights, meaning they can force the company to register their shares, and piggyback rights, which means they can include their shares in other registration statements the company files. Beyond these specific agreements, the deal also contemplates other ancillary agreements that will be put in place before the merger is complete. This section is about a press release announcing the merger. The press release from May 1st is included as an exhibit, and it essentially communicates the same information we're discussing here. This is a standard move for significant corporate events. Now, we always see this section in filings. These are forward-looking statements. Basically, these are statements about what the companies expect to happen in the future. Things like future performance, the completion of the merger, and anticipated financial impacts. They use words like expect, believe, and plan, but it is super important to remember that these are just expectations. The filing lists a bunch of risks and uncertainties that could prevent these future expectations from coming true. For example, they mention the possibility of the merger agreement being terminated, legal challenges, failure to get approvals, or not being able to get the combined company listed on the stock exchange. These are standard risks for any merger, especially with SPACs. This part tells you where to find more detailed information. They're letting investors know that a more detailed registration statement will be filed with the CC. This document will include a proxy statement for shareholders to vote on the merger and a prospectus for the new company. They urge investors to read these materials carefully when they become available. This section clarifies who might be involved in asking shareholders to vote for the merger. It is usually the directors, officers, and employees of the companies involved. Finally, we get to the list of exhibits, which are the actual documents that support this report. Here you can see the full merger agreement, dated May 1st, and the press release that accompanied this announcement. The asterisk next to Exhibit 2.1 means that certain schedules and exhibits within the merger agreement itself have been omitted, but the company promises to provide them to the SEC upon request. This is the official signature section, showing who is signing off on this report on behalf of GalaxyEdge Acquisition Corporation. The signatory here is Ping Zhang, the Chief Executive Officer of GalaxyEdge Acquisition Corporation. So, what is the big picture here? This filing confirms that GalaxyEdge Acquisition Corporation is moving forward with its merger with Rongcheng Group Limited, a waste sorting services provider. The deal values Rongcheng at $350 million, and the combined company's shares will be listed on the NYSE key shareholders, and the SPAC sponsor have committed to supporting the deal with shareholder support agreements, and lock-up agreements are in place to provide initial stock price stability similar to what we've seen with other SPACs. The main takeaway for investors is that this is a significant step towards Rongcheng becoming a publicly traded entity, and all eyes will be on the upcoming registration statement for the full details and vote. The risk I am watching is the successful listing of the combined company shares on the NYSE, which is a critical step before this deal can be finalized. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like this video, subscribe for more, and consider joining our Discord community linked in the description.